Good morning. It's Thursday, February 27th, about 6 a.m. Central Time. Thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. I'll be on CNBC at about 1:30 Central Time. I'll be discussing copper, silver, possibly aluminum. So tune in if you want to check that out. CNBC 1:30 Central Time. So let's get you ready for the trading day. Let's look at the precious metals markets, the futures, the commodities. So looking at the precious metals overnight, the futures, they do remain mixed here. It is led by copper and aluminum a bit higher here. Platinum was higher before settling back. Gold futures under some pressure here, down about $34, trading near the lower end of the range here. So overnight highs 29.35.80, overnight lows 28.89.40. Where are we trading at last? 28.96.20. You do have silver futures in the middle of the range. Now you want to focus on the May contract. The March contract rolled over to May, so you're going to have your first notice date on the March contract will be tomorrow. You're going to want to roll today. That's generally the company policy and the policy of all the FCMs if you're trading in that particular contract. So May silver again down 20 cents. Overnight high 32.59.5, overnight low 32.15. Copper futures up 2 at 460, 463 being the high, 454.90 being the low. Aluminum futures up $16 at 26.33. Platinum futures unchanged 9.76. Palladium big discount $50 lower here at 9.26. And the gold silver ratio dropping back to 89.5 to 1. Remember we peaked at about 92 to 1 just a couple days back here. And if you rewind back to the start of the week, gold futures were trading just making new all-time highs here. So it's amazing how you go from an all-time high down to a bit of a sell-off here and trading right around psychological support. That tells you that these consolidation patterns, they get quite wide. And when markets fail to break out and extend upwards to that 3,000 at 3,100 mark, it does put a bit of warning sign, and those sell-offs are just a touch bit vicious. Now looking at some other things here, U.S. equities pushing up 39 points here, 60.10 on the S&P, the NASDAQ up 156, and the Russell's up 20. The dollar index is also up here 26 ticks. All your foreign currencies, except the Mexican peso, are weaker here. Perhaps Trump said something about delaying some tariffs on Mexico. I know he's been working with them as they import a lot of goods in from China. They use those goods to manufacture cars, and they send those cars into the U.S. He's asking them to implement some reciprocal tariffs back onto China and to tariff them. And with that negotiation process, we're seeing the Mexican peso just a bit higher. You have the agricultural market slightly mixed here. Soybeans getting a little bit of a boost. It's led by that meal market here. There was some news overnight with regards to that. You look at crude oil futures. Crude oil futures coming back down to a trend line here, right around that $68 area, and we should see some kind of bounce start to develop here in the market. We're up about 1% here today, so a lot of people are looking at crude oil back to the upside here. If we can get this bounce and confirm it, and they're looking at putting in a couple dollar stop here. Not a formal recommendation, just giving you some insight on what a lot of the traders that I deal with are doing with in there. Bitcoin futures snapping back about $2,500. That's a market there that tested that level that a lot of people were looking at. The 85 to 83 level as your first major support. Seeing that market bounce back up. Most likely upside on this bounce, about 90 to 92,000 before potentially rolling back to the downside. So looking at those equity markets, getting that boost on Nvidia. Nvidia's quarterly sales were about 43 billion, slightly above the analysts when the gross profit margins were a bit tighter here. Obviously, everything surrounding that Blackwell chip design here. So the company's outlook a bit mixed here. So there's some concern about data center operators are slowing their spending on AI. There's risks with the U.S. tariffs, but CEO Jensen Huang remained optimistic on the future growth. I read and I looked at and I listened to what he was saying here, and it seemed a little bit mixed here on what he was indicating. So we do have GDP coming out here today. U.S. Treasuries a bit lower on that. We're seeing the yield start to push up just a touch here. So we're really waiting to see what's going to happen with GDP. We also have a lot of data coming out this week. So traders are pricing in 2 interest rate cuts by the Fed this year. And I noticed that once we saw the 2 interest rate cut come back into play, that kind of marked when gold started to sell off. So it was the weaker data here, specifically out of the consumer, really kind of taking things down here. So you want gold to have this kind of vague thought process as far as the price action, the people that are speculating in as to what's going to happen with the economy. Remember, stagflation, that's your best performing asset class during a stagflation regime. When you go into deflation, it seems like kind of everything sags with it here because you're going to get those cuts and people are really concerned. Do we need to really be buying gold at these higher levels if you're a consumer? They'll kind of pare back some of these markets here. So again, back to that oil market, kind of swinging near these 11-week lows. Uncertainty about some of the potential tariffs, the energy growth, the energy demand. That's why we came down to these levels here. But you start to look at some things like the tighter sanctions against Iran. There is some concerns about Venezuela and Chevron. With an oil license, they're looking at a potential revocation of that, and that's what's kind of boosting some of these markets back up. So we're looking at copper futures because copper futures have been one of the best performing commodities, and it's one of my favorite markets to trade because of the fact that it's $25 for every penny move in the copper market. So I think contract size appeals to a lot of different investors out there. Same thing with the 10-ounce gold, same thing with the 1,000-ounce silver market here. So it's really been a race to get that copper into the United States. The threat of U.S. import tariffs has created this opportunity for traders out there, and it's a thing that we saw in that gold market where we saw them shipping from the LME over to the U.S. trying to beat these tariffs, and that drove prices up. So it's the same type of effect going on in the copper market right now. Really, the imports have been coming from Asia and South America. They're trying to take advantage of that price gap. Now, you saw copper futures go up quite a bit here yesterday, and then they settled back on the day. And the reason was there was a potential 1-2 punch to get copper futures pushing up. It was because of this mass blackout that occurred in Chile, and some of the world's biggest copper miners, they had to restart their production after the worst power cut here in decades. The entire country was basically out of power, which is just unfathomable to me. So looking at that copper market, 460 here last, 463 on the high. Let's keep an eye on looking at that high there. So gold, here's my concern on the gold market. It starts to set and end that 8-week winning streak. So traders are taking a bit of profits. Now, if you look at your critical level support right around this 2,900, you go below that, it's 2,874. So we don't want to see that market break that 2,889 because we could potentially wash out down there. And there's a major trend line at about 2,850 is your critical level of that support in the market, and it's your long-term support. So we come back down to 2,850. It kind of sets up the second scenario where prices going out to the end of the year could end up right around that 3,100 based on what we're seeing here. If we were able to retrace back up and get near these all-time highs again in a pretty quick manner, then that's where we could see the extension higher, that $3,100 to $3,300 an ounce near that year end. So traders are waiting ahead for that Fed's the inflation gauge here and the clues about the monetary policy. So you go out to the end of the week here, we got the PCE, we've got the income spending, we've got personal income, personal spending. We do have Fed Austin Goolsbee, he's going to be speaking. So today it's going to be U.S. GDP, durable goods, initial claims. We do have Eurozone consumer confidence as well. You get into the ETFs, you start looking at some of the sells and the buys. We did see exchange traded funds. They did add to their gold holdings yesterday. So we'll see what happens today. I think that these dips on with the ETFs and the flows coming in, they have been buys on any of these dips. Silver futures, a bit of a mixed bag here. So we saw ETFs, they cut about 2.35 million ounces here from their holdings in the last trading session, and it brings this year's net sales down to about 5.49 million ounces. So year to date, gold on the ETF flows up 3.1% higher on the year, silver down about 0.8%. So again, I reiterated this yesterday. This video here is going to end up behind our website here where you're going to need to log in and get into it. We will be putting out a short version of the video on YouTube and things like that to keep you slightly informed on it, but really all the meat of the video is going to be behind the Blue Line Futures website here, and that's going to roll out in the next week or two. So you got any questions, you give me a call, 312-858-7303. Love to work with you over here. Love to work with you on the futures and commodities side of things. We also, if you want a hands-off approach, if you want a fully managed account, we do have that through our CTA. It's an award-winning CTA through Blue Creek Capital Management. It's our Global Opportunities program, has 40% on the metals front, has 30% on the equities, has about 15% on energies, and then we do sprinkle in some of these other opportunistic commodities like the cryptos, the agricultural markets, the softs, the interest rates, the currencies, and everything else. So got any questions, again, give me a call, 312-858-7303. Remember that futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.